I think he made a huge mistake. There's no question the banking system's in terrible disarray, and it's just going to get worse. The negative arbitrage between going to Treasury bills at 4.80 or money funds at 4.5 and banks paying 1 to 2%. Banks are going to continue to lose money and lose deposits. It's just going to get worse and worse and worse. And he did say that 6 banks are in trouble, or he used some kind of specific Fed verbiage to say that. So I think the banking system's going to get a lot worse. So I think that tells you that steepening move that we're seeing tells you that there's a lot of problems out there, and the Fed's going to have to ease, and the markets do not believe that the banking system is solved.
Now, we're not going to get anywhere near 2%, maybe not even in our lifetimes. That's how far off Powell is. You know, the reason that he hiked rates, he's borrowing a trick from a magician. It's called misdirection, because with the one hand, he's raising rates, but he's got another hand behind his back where he's just returned to quantitative easing. He's actually creating inflation. He's not fighting it. And I thought one of the most ridiculous comments he made is when he was kind of asked to explain that. And Powell denied that the Fed was back to quantitative easing. And the reason he said that it's not QE is his explanation was when the Fed was printing money and buying bonds because it wanted to bring interest rates down, that was QE. But now it's printing money and buying bonds, but it's doing it for a different reason. So even though it's exactly the same, it's not QE. So when you create inflation because you want to, it's quantitative easing. But when you create inflation because you have to, then I guess, you know, he pretends he's not doing it. But he is creating inflation. And so what Powell is now doing is pouring gasoline on a fire. He's just pretending that he's trying to put it out.
But here in the United States, regional banks are under severe trouble. You know, SVB, you had Signature. I mean, the Fed last week had to put $440 billion into the system. The Home Loan Bank put another $300 billion. It's effectively wiping out the whole QT that they've done in the last 11 months. And it's going to get worse, worse, and worse. I was scanning the headlines today, and you have West Bank had to get some outside sources of money. They've lost 20% of their deposits. And as you go on, you mentioned Comerica. I'm telling you that this is mushrooming. We need to lower rates 100 basis points. Forget about inflation for the moment. We need to get to 3 to 3.5 in order to stop the bleeding in the banking system. All right, that's what we need to do. And Powell's not ready to do that. He's not ready to think about that. But, you know, that's what he really needs to do. So, yeah, as far as what do I think I think this, again, is the last Fed hike in this cycle, but we'll have to wait. If we get 6% inflation numbers, then he's going to try to do it again. It won't work.
Well, I agree. I think this is the pivot. I mean, it's a soft pivot, but he made it clear that he eased his forward guidance. So I think the next move from the Fed is going to be a cut. But inflation is going to be much higher than it is right now when the Fed does that. So the Fed is going to have to give up this pretense that it ever has a chance of bringing inflation down. You know, I thought one of the most foolish comments that Powell made is he said that he didn't think there was any risk to the Fed. Well, because he said the FDIC is insuring the banks, but the FDIC is broke. They don't have any money. The only way they're going to get money is if the Fed prints it.
Well, Signature's here in New York, but SVB, they were in there. They were looking at SVB. They had recognized there was a problem, but they didn't do anything about it. And there were so many better ways for SVB that they could have lent their portfolio over to the Fed. But once they sold their portfolio to Goldman Sachs and took that multi-billion-dollar loss, all right, that alerted everyone. And Goldman said, well, we'll sell your stock for $200 a share. It was trading at $269. The next thing you know, it's 106, and the next morning, it's 38.
You're never going to get effective regulation by the government. What we want is free market regulation. Unfortunately, we don't have that. You know, this financial crisis has been obvious for years. Only government regulators are blind enough to miss it. But if the government wasn't there, if banks and their depositors, more importantly, realized that their money was at risk, it's just politics, but it's not really going to be taxpayer dollars. It's going to be inflation. See, every American, whether they pay taxes or not, is going to bear the cost of these bank bailouts. The value of the dollar is going to implode, and it's going to impoverish the vast majority of Americans. And they need to know the reason they're going to be so poor is because of the government. It's not because of the free market, because we don't have one. And Powell copped out when somebody asked him, you know, what about would you need some help from fiscal policy? And he says, well, we don't want to give any fiscal policy advice. That's BS. Well, by running these huge deficits, it's up to Powell to tell the government to stop doing that.
On one side, you have regional banks, and they're going to stop their lending. They're going to cut down their lending. It's going to hurt commercial mortgages. It's going to hurt small companies, small cities. And on the other hand, the Fed's going to have to respond by lowering rates. So the market realized now that rates have to come down. And whether Peter's right or not, he's right on certainly a lot of things. The Fed itself has lost $1.1 trillion in their holdings just because of the way interest rates have gone. But I think the Fed's eventually going to lower rates, and I think that's what equity markets are betting on.